Welcome back. We're live. Welcome back to this live stream once again. Hope you're doing fine. Let us know in the chat if you're watching this live. I would really appreciate that. And if you can also share this with people that you know, share this with your friend on Facebook or wherever you prefer. That would be really really good because we want to be giving you value to do. We want to be helping you to reach your goals in trading. And we'll be going on a lot of things, technical today more than usual. So hope you will like it and hope that's going to be useful for you, of course, to learn these things. So again, if you have any questions, comment below in the chat. Let us know where you're watching this from. Once again, I'm with Michael Tama. Michael is, as you know, a full-time trader, trading futures, options, and forex a little bit. So he's going to be able to tell us about. It's a topic that I find really interesting. Is a trend really your friend? And we'll discuss that in detail. Again, if you have any questions, you can post them in the chat, and Michael will be able to answer your question as well as myself, of course. And let's just make it informal, make it fun, make it light and relaxed. And we'll be able to chat and see how we can have better. So, Michael, what's your first thought about the trend?
Well, I mean, it's kind of the reason why we're here. I was always skeptical when I heard that, the trend is your friend. And I always just shook my head and I go, it became like if enough people say it, it becomes true. But really, the math behind it says it's not really that true. Or at least a lot of traders put too much focus on trend-based trading.
Awesome. So that's something I've seen as well. Like, as you know, I don't trade trends primarily. I trade reversals. Why do you think that people get led into the idea that trend is important? Why is the trend such a big aspect? Is it because it's easier to spot than reversals, or what do you think that happens?
Yeah, I mean, I think that's true. But I was doing a little more in-depth research for our academy members, and I found out there's a psychological element to it. We as humans, we love trends, we love patterns, we visually detect them. We're more comfortable when we see things happen in like a series of events, not just in trading. And so it makes sense that traders just like to play trends. They think they're there, and they do exist. It's not a question of that. But the math is saying that for the most part, they're not there as much as we think. There's a lot of randomness involved, and if you look at like just the basic premise of, underlines making a new high after a higher low after a higher low, after two or three times, which you would consider a trend, doesn't happen that much. More of like 75-80% of the time, it's not doing that. So the question is, the trend your friend? Well, maybe 20% of the time. But what are traders doing to take advantage of the other 80? That's really why we're here today.
Cool, awesome. And big shout out to Francis Q, which is in chat. Francis is in quarantine after traveling to Russia. So we were just talking about this before we went live, Michael and I, about traveling and stuff. Quite interesting. And we'll be traveling soon, I think. I hope, Michael. We'll see. But it's been a long time we didn't travel that much.
Yeah, I miss it. I mean, it's good to get back into the airport scene and stuck in lines. And, I really, we're junkies, we're traveling traders, and it's an important element to our life. So we kind of miss it. Can't wait to get back on the road.
What are some of the stats or, I guess, examples where you can show people that the trend doesn't matter that much? I remember, a few years back, I interviewed, I believe it was Van Tarp, or, no, not Van Tarp. The guy who wrote Trade Like a Casino, Richard Westman. I interviewed him on a podcast a few years ago, and he was saying the fact that it's been shown, and he did like a lot of tests, a lot of back tests, to show that if you were to do the opposite of most people, when they see the RSI being oversold, right, they will buy. But if you do the opposite, it's gonna usually be better over time, and you'll get more reward than if you do what people say you should do with the RSI. So I'm curious if you have any other stats or examples with your trading or with other things outside that kind of might give us a clue that the trend is not really so powerful as we think.
Yeah, I mean, think about and use the example of RSI or just a basic stochastic. How many times were you in a trade where, and I'm guilty of this too, where you maybe try to fade a move where the stochastic is overbought, and you try, and you go short, and it stays that way, and you end up getting stopped out. Well, it should show that it should reverse and get you back to a normal sort of reversion to the mean type thinking. So, the thinking of the trend is your friend, the answer probably is yes. But the fact that the trend doesn't happen that much compared to just random normal chop says that the trend is your friend, but only 20% of the time the trend is your friend. And think about what about traders who enter with confirmation, where like you confirm that a trend exists. A lot of times that's half the move to begin with. So now you're stuck in a position, you're almost going to a hope that the trend continues, not even starting from a trend, like a breakout type situation. So now you have to manage that. What if it's just a pullback? Now you're in a trend, but is there like you're in a trend, but you're down money? So there's a lot of challenges. I guess the question is that what are we going to do as traders to take opportunity of the other 75%? Because the trend isn't your friend there, but does that mean we just sit around? I think the best traders, no, they take advantage of those markets.
Yeah, and one thing I'm curious about, I was trying to think about it a little bit while you were talking, is the fact that if we say we want to follow like the big banks, the big money in the market, and we want to be able to trade along them, they're not necessarily going to trade the trends, right? They're more likely going to want to wait for a better price to enter the market, and that's where the reversal come in. Do you think that following the trend is a way to kind of go with what the banks are doing, the big institutions are doing, or is it kind of like the foolish way to try to follow them?
Yeah, I mean, following the big money, I don't know. I've never been like, if I don't have that information of where the big money is, then I can't follow it. So I only follow with the information that I have. Yeah, sure. If there's big institutional pushes and really start to see big blocks and big volume on like say futures market type thing where volume is prevalent, yeah, sure. I mean, you could take advantage of that. Trends are great. I mean, trends are great for home run trades, but if you don't have the information, take those little, taking crumbs during chop markets, really, it pays for those losses. It pays for, the expenses of a trader, it pays for the lifestyle. The home runs are great. Don't get me wrong. I love them. But a lot of times in these big home runs, I'm riding a trailer, which is basically 1/3 of my position. I can't have full boat on something that's, in a home run side. I got to start taking profits somewhere. So, keep in mind that these random, chop non-trendy markets are tremendous opportunities. It's just you have to have a strategy that matches that. And obviously, Tian and I, we've been doing this. We've been trading these for a while. Obviously, in a trendy market, we'll shift gears, but there's a lot of opportunity there, and again, that's why we're here today.
Especially, I know traders who trade trend who have been complaining for the past like year and a half that there's no trend in the market and it's all dying out and forex is dying and stuff. But there's many ways you can go around it, and you can go to the time frames. You can try to find more kind of bounce trades or shorter term trades, and I think that's a way to go that makes sense for a lot of people.
Yeah, it's trend trading is sexy in a sense that it's easy to sell. We do presentations to our groups and things like that. They love that. A lot of the questions is like, did you follow the trend on this one or look at the trend on this? And you're right. Some of the FX markets until lately have been somewhat dull, low volatility. But that should spark the mind and say, not that there's nothing to do. There's something else to do with a different strategy. And I think when they say the trend is your friend, I think a lot of traders are missing out on this tremendous opportunity when you're sitting around 75% of the time waiting for a trend. Say, what can I do to take advantage of that and improve my P&L?
Yeah. Well, they have to mention that if you're going to trade reversals, you're probably going to aim for lower rewards, like a less big move as opposed to if you trade trends, which I think is really attractive. Like when you trade trends, you can show, I entered here, I sold here. It's a big look at the big profit. But if you trade reversals, you cannot really do that, right?
Right. Yeah. I mean, think boring. I mean, boring is good. Boring is profitable. It's look. I want to have fun just like everybody else, and I'll talk about my runners. That's like the thing that you talk about at the happy hour. But really, the grunt of being a trader is taking these little crumbs during that chop. That's how I personally built my trading business. And when no one else really cared, I was just, the market is a big monster, and if you fight them, it's gonna crush you. But if the monster drops a few crumbs on the ground and you pick them, monster's not going to care about you. So kind of be that like backdoor person, just taking little crumbs out of the market, and you'd be amazed. They add up and they build your capital. So you could either trade your own accounts, prop, or trade other accounts. But those really at the end of the day, it's about P&L, and when the account value goes up, It's a pretty cool thing. No one's going to look back and say how great a trade that was. You're not going to remember that stuff. So again, just be consistent. And also, I think personally, trading in chop markets really helps your equity curve, which is very important. That when we do trade journal audits, it's nice and smooth. When you have trend markets, you'll see these big moves, and when the trend stops, you'll see these big drawdowns because they're trying to fight something that's trying to get something out of a stone that's not there. Slow and steady wins the race, and 80% of the time, the opportunity is there for slow and steady.
So how do you know when you shift to trading trends versus reversals? Do you have like an indicator that you follow or that you use for that, or is it based on maybe kind of? I know you use a lot of different levels, like pivot points and stuff. Is that based on that, or is it based on purely how you see the market and what you think will work at that time?
Yeah, I think there's both. The first is, and what I use is, rather than indicators, I look at where are we in market context. So if we have a big trend underway, all right, and it seems like it's underway. Once it starts getting a little long in the tooth, I'm already starting to think pause, because even in a trend market, they run up, pause. That infamous bull flag or bear flag. That's really just a pause. What that is consolidation. That's where our chop comes in. So during a trend, I'm already thinking, when's the next phase going to occur? Conversely, when it's chopping or consolidating, I'm starting to already think about breakout. I'm starting to think about the trend. So I want to be in on those moves before they even start. I'm anticipating that. And if I'm wrong, I know where I'm wrong. And usually the stop out's pretty tight because, it's I know where I'm wrong. As far as indicators, one of the things I use is I like the Bollinger Bands because the Bollinger Bands, when they sort of tighten up, they sort of squeeze. That initial start of squeezing is that initial indication, at least from an indicator, that things may be starting to consolidate here. So I'm going to take advantage of that. I'm going to go right into chop mode. And again, if I'm wrong and the trend continues, I know I'm wrong pretty quick. So Bollinger Bands, BBs for me, those are sort of my first go-to as far as an indicator.
So what you're referring to would be price kind of starting to lose momentum, but not reversing yet, starting to lose its power kind of, and then you would be getting closer to a sort of reversal or at least a bounce.
Yeah, I want to be the first guy to the party, and if I'm wrong, there's not much of a room. There's not much room there. I can take my small hits, but yeah, and then once it starts consolidating, I'm already in this. I'm already knee deep, and I'm probably taking profits where a lot of people are getting in. So I mean, more of anticipating that. I think the Bollinger Bands, at least visually, and again, I'm not a huge indicator guy with a lot of indicators all over my screen, but the Bollinger Bands do give me visually a really good, inclination of, hey, things are starting to slow down here, at least as far as the trend. And when they start to tighten or like squeeze, that's usually my sweet spot.
Interesting.
Yeah.
Are you aware of any kind of, and maybe we can show the charts later, we can go on some examples if you want. I think that would be cool to see, just for fun. Are you aware of any kind of studies where they've looked at like if let's say a big bull, they could predict the result the next day or something of the sort?
Yeah, I mean, there's some studies done, mostly, in the futures markets, bonds, gold. There's a couple other ones done. And basically they came to the conclusion is that the markets are, most of the time, they're just random. There's, what was the result of an up candle on, an up day on an up candle with price closing at its highs? The result was about 53% of the time, it continues, or it goes in that direction. It's about a 50-50 shot. And really the only reason 53 was there was like a market, there's just like that market sort of pulse that markets go up more than they go down generally, at least on the equity side. So really it's just like almost like a 50-50 shot. And you say, well, yeah, but the trend is your friend. Well, yeah, the trends are your friend when you could see that there's a trend. Trends do happen. But the general market studies that I've seen is that really it's just kind of like one random thing. Although our mindset thinks that the markets are always trending because we see them, we visually appeal to like trending markets. Kind of interesting math behind it. But I'm going with the math on this one. I don't need to be, pleased visually. I just show me where the opportunity is. I'm going to take advantage of it.
Awesome. I was curious if you can go on the chart. Just an example of what you were talking about before, and let me know if I'm wrong or right in this. But I just pick up a random chart here that I had on my platform on TradingView. So what I'm seeing here is, and this might not be the perfect example. Of course, it's not like it's picked randomly like this quickly, but you've got your price here going in sort of like a trend, right? So this is a weekly chart, by the way, which is quite a big time frame. So going down and pulling back up a lot, and you got this kind of squeeze here of the Monk's Band. Would that be something that you look at as a sign of a trend changing? So it's going up, it could be going down soon. Would that kind of be what you're looking for?
Yeah. That's. I mean, there's a couple of good examples here. Right where you had it, like mid, around 2014, around March and April. Right, you start to see that initial squeeze early 2014. There you go. Keep going a little bit more, and right where your arrow is, you start to see that initial Bollinger Band kind of squeeze. Look at price action, right? The Bollinger Bands are kind of wide, starting to squeeze, and look at the price action. You didn't even have to wait for consolidation. You kind of took advantage of it, and look where it squeezed to this like really tight thing. There was about 4 months there, and I know we were looking at probably a weekly chart, but there was like a 4 or 5 month consolidation. That's a lot of time to take advantage of those markets. One great example is earlier in September of 2012. If you look at those, right? So you see price ran up even further, like in June, July. Yeah, price ran up, and then what happens? Look at that squeeze on the Bollingers. Like, why aren't they expanding, right? So a lot of this is just rotational, right? You anticipate it. Look at the move before. It looked like a nice bounce. Trend is your friend. Hold on a second. Bollingers are squeezing. That initial movement towards squeeze, whether this is a weekly 6 month, you had 6 months there, or it was 6 days, on a daily chart, there's plenty of opportunity to take advantage of that chop. And look at those touches on the Bollingers, like 1, 2. It's like a ping pong table. Those are all opportunity that I think a lot of traders sort of pass up, waiting for the trend. And waiting, there's a cost to it, an opportunity cost, which I think traders, if they can come out of any takeaways out of this little discussion, is, hey, maybe there's opportunity that I need to look at in addition to my trend strategies. But 2 great examples there. I love it.
Yeah, and this is interesting because the fact that I would think like this is something I would trade. I don't really on a weekly chart myself, but this is something that could look good on a weekly chart as it's set up by itself and at the right level. But as you see with my example, it's going up, it's kind of slowing down, getting to a tight range, then pulling back down, and it would hit your stop loss most likely over here. So that's something I think could be avoided if you look at it that way, with the Bollinger Band, seeing how the Bollinger Band moves to give you an indication of whether it's likely to die out or go out in the right direction.
Yeah, and this is a great, this is, we didn't look at this before. This is a great example where there's trends in here too, some nice trends. But look at the overall markets. I would say just visually, at least 60-40, 65-35 consolidation versus trend in just looking at this chart. And that's probably the norm for most type of markets. And, when you get crazy markets like we're in today, there'll be a lot more, maybe a little more trend-based, but, because of the volatility. But these are really 2 good examples of, and ask yourself as a trader, what did you do during this time? And again, this is like a 6-month period we're looking at, but say this was, a 5-minute chart. What were you doing at that time? If the answer is, well, I was waiting for a trend to occur, start to think that, maybe I should have a strategy that takes advantage of chop. Why am I waiting?
Yeah, and this could be a way to catch trends too. So I see a really big benefit in trading reversals, potentially waiting for a reversal to turn into a trend. I think that could be a good way as well. So as you see, like this example that we showed before with the big tightening of the Bollinger Band, it eventually makes kind of like a trend to the downside. So it goes into reversing, but going even deeper than that. So if you are going to benefit from that by having a stop loss that you move, like a trailing stop loss, or many take profits, I think that could be a really good way to catch it as well.
Yeah, and think about, and again, this is the risk manager hat coming off, coming on, which I always do, is think about if you trade in consolidation, reversion, and then all of a sudden it turns into a trend against you. Well, pretty early when that's happening. So, you can keep your stop relatively tight. You're not going to just like blow a trade going through this trend, hoping that it goes back to consolidation. So, it's I like the risk profit factor, risk reward ratio, whatever you use. I love that in consolidation, which sometimes, quite honestly, in trend trading, you have to have the home run trend to make that 3-to-1. Consolidation, you're not going to make as much, but 3-to-1 is like nothing in consolidation. It's kind of easy to hit.
Awesome, very cool, very good example, and I'm kind of happy you showed the chart because it brings the point on a more visual level, which is really good, I think. So I really like that. Cool. So if you guys have a question while you're watching live, actually comment below in the chat. We'll be answering your questions pretty soon. And if you have questions after you're watching the replay, it's fun too. Comment below in the comment section. We'll be able to answer your questions as well later that way. And I want to take a few moments just to introduce. We have a training we do this Saturday, so tomorrow, the 25th of September, a free training on how to get funded by prop firms. We're going to talk about the 3 secrets to things to do before you get funded with the challenge for a prop firm. If you want to be able to learn these things, make sure you sign up. The link will be below as well. The first link in the description. There should be only one. It's going to be for you to sign up to that. It's live and online, of course. And we have a few number of places available now for the training. So just sign up for that. It's totally free again. I'll teach you things that I don't really talk about anywhere and that I want to bring home. And Michael is a big inspiration for this. Someone who really kind of helps me to see things in a better perspective. So that's going to be covered tomorrow at the training. And I definitely hope to see you there. So first link in the description to sign up for that training. And Michael, anything else we have to add or anything you want to mention about trends and versus not trends?
Yeah, well, I mean, talking about tomorrow we're have this really cool instructional summit webinar that we're going to talk about. We're going to talk about we help traders get to be funded by prop firms, and what we see the results of ones who failed and ones who didn't. The ones who failed didn't necessarily fail. They just were waiting for trends, and that their excuse, and it's very valid, was the market wasn't trending, so I didn't pass the challenge. Well, the ones we found that passed really took advantage of those chop markets and recognized it, and those are the ones who got funded. So, we're going to talk a little bit about that tomorrow, and so if you can attend, that'd be great. But yeah, this is not just about becoming a better trader or having more winning trades. It's about getting funded, and we're definitely going to be touching on that tomorrow.
Yeah, and in the end, I think the point is not about one way is better than the other. It's not about if you trade trends, you're bad. If you trade reversals, you're good. It's more about kind of understanding where we're at in the market now and being able to trade something for that situation. Or if you see trends don't work for you, then go to reversals and try to learn something different and try to see if that works better for you.
Why waste the trading challenge?
Yeah.
Why waste the
being able to change things and go ahead.
No. Why waste an opportunity during a challenge? Like, well, there wasn't trending market, I couldn't do it. Well, why don't you go into consolidation? That's it.
But the key thing is you got to prepare for that before the challenge, not in the challenge.
Exactly. And we'll talk. We're going to talk about the preparation part tomorrow as well. So that's cool.
Yeah. Awesome. Cool. Any question you guys have, make sure you comment in the chat. We'll stay here a few minutes live again for your questions. And if not, that's totally good. Like, I hope you're getting this and using this for your benefit and that you'll be able to get something out of it. And Michael, what else do we have to talk about? Or any thoughts you have about this topic?
Yeah, I think you hit on it spot on, Etienne. Is that recognizing some of the challenges we find with traders is they have a strategy that's made for this type of market, and it works really well. I mean, they'll do their equity curve, and they'll show me their trade journals, and it looks really well in that market. But when you're not in that market, the performance suffers. And it may not even suffer financially. It just suffers like an opportunity. So one of the takeaways too is, do you have a strategy that takes advantage of different markets? It seems like everyone wants to build, and we're guilty of it too, like in our algos and stuff. We build trend-based strategies. We code them. But there's a lot of opportunities sitting there. So in chop markets. So do you have a strategy to do that? And again, something that is one takeaway for the traders out there watching is maybe that's a red light, a light bulb that just went off on their head.
Yeah, and one thing I can tell you for sure is it takes a long time to understand when your strategy works the best and when it doesn't work. Something I had a hard time with before. What would you suggest people to do if they want to figure out when they perform the best in the market? Which kind of market they perform the best in? Yeah,
I mean, we'll throw that old, are you comfortable? Some people are just comfortable trading certain markets, certain trends. Trend-based trading is like it's easy in the sense it's fun. It's when you have a winning trade, it's like you sort of picked it. But again, I said this is a business, and sometimes running a business is not about fun. It's about revenue. It's about income statements and things like that. And quite honestly, I found that trading those choppy markets really generated the capital. One, to run the business, the expenses, pay the bills, and then it's just the trends that really provided like the home run that provided the nice steak at the restaurant, or the nice vacation. But I think you need both, and I think we're missing out if you don't take advantage of both.
Awesome. That was really well summarized, and I think that was something that people can apply really quick. Someone was asking if the pair was NZD CAD. It's actually AUD USD that we shared before. So NZD CAD is not a pair that I trade that much. I trade a little bit, but not so much. I just picked the first one I put on my platform, and that was AUD US dollar. So that's it for that. And you can see this on pretty much any pair. It's not something I worked on some pairs. You'll see these like chops of the bunch band on any pair that you look at.
Yeah. Any pair, any underlining, futures, equities, or whatever it is, Yeah.
And this is a question I'm curious about. So some people say that the forex market trends more than futures or than stocks. Have you seen a difference? Or I know they're saying out there it's like something like the forex market trends 70% of the time, futures or stocks trade. I'm not sure exactly. But have you heard that statistic?
I mean, from my experience, I found that until lately, the past month or two, the FX markets were not trending as well as the equities, the futures, things. There's no question. The volatility was lower. Who knows what's going on? But we've just accepted that. And in the equity markets, especially like equity futures, there's this like run up, pause, reverse, run up, pause, reverse, and it's that constant. It's always like that, and it's normal because when it runs up, people are taking profits. People may be shorting, trying to the highs. So this is like this consolidation, and then it continues. So if that's that pattern, we just try to take advantage of it using different, whether it's trend strategies or when it's consolidation, using like chop strategies. So I found that the FX were a little dull. But I have to say, the past month or two, I don't know if what's going on, but they're really starting to spark their heads, which it's exciting. Even in our community, I start to see the traders getting more excited. They're posting more winning trades, and so it's good. So the chatter has been increased. Which, hey, bring on the vol. That's how we make our money.
It's pretty cool, And it definitely goes through cycles. Sometimes it's good, sometimes it's less good. Then you gotta be able to adapt to both, I think. So that's the key part. Hope you guys enjoyed this video today. Hope you like it. Make sure you share it with people that you know. If you have any friends or any trader that could benefit from this, share it with them. That would be really, really cool. We want to be able to help as much people as we can, and then really reach people that need your help. So if you do that, that would be really, really awesome. And I hope to see you at the training tomorrow. The link is in the description to sign up to that training tomorrow, and we hope to see you there. Thank you, Michael, once again. I think good advice as always, and we'll catch you guys pretty soon.
Yep. See you tomorrow, Etienne. Hope everyone can join us.
All right.